we're going to do analysis of risk reward in naked options. Selling options naked involves higher risk but offers more profit potential. Everything in our business, you take more risk, you can make more money. That's how it works. That's all there is to it. Everything is priced that way. While creating spreads with further out of the money options reduces risk, it also reduces profit potential. Traders make this choice based on their risk tolerances and market outlook. With naked options, how does using spreads with out-of-the-money options, how can that help to offset your delta and reduce your directional risk? And what decision is essential for tailoring your option strategies to your desired risk-reward profile and market expectations? Let's take a look. So we did a study. It's 14 years of research. We sold a 35 delta put. We sold a 30 delta put 45 days out. We managed it 21 days. We compared the
classic right there, right?
Classic. We compared the naked short put to buying wings at 2 deltas, 5 deltas, 10, 15, 20, and 25 deltas. We recorded the average credit collected, worst loss in dollars, largest profit, the win rate, CVAR, standard deviation. We give you the whole shebang. Let's go to the next slide.
Whoa.
Yeah, you're going to have a lot of stuff here. And as is always the case when we do research, we go through it relatively quickly, and then we post it, and you can go through it at your own pace, at your leisure or your own pace, whenever you'd like. So it is easy to observe how clear and one-directional the trade-offs are. As the delta of the long wing increases, what happens to the other metrics? So you can see here, as we increase the delta, the win rate's going to go. Now, again, we've been in a bull market from 2010 to 2024, so it's a little bit skewed. That's why whether it's a 2 delta or 25 delta, they're all pretty profitable. But you can see how the largest profit goes from no wing all the way down to a much smaller amount of money. The worst loss is always going to stay kind of around the same until you get to really tight spreads.
Right, the closest one where after no wing, the 2 delta would be the furthest away. That would be the widest spread that you would have, and then you get much closer as you get to the 25 delta. They're highlighting that 15 and 5 delta, that 15 delta.
This is a very clear picture of just how symmetrical risk and reward is. If you want to take more risk, like with no wings or 2 delta wings, you're going to make more money. You're going to take more risk. You're going to make more money. And your worst losses are going to be, virtually the same. When you want to sell the 30 delta and buy the 25 delta, you are going to make a lot less money, and your worst loss is going to be a lot less. Let's go to the next slide. We observe that as the delta of the long wing increases from no wing to 25 deltas, the win rates seem to remain constant or stable. CVAR and standard deviation progressively decline as the strategy shifts from a naked short put to adding wings at various deltas. Going from a naked short put to a spread can reduce a worst loss by a significant amount. Purchasing the 5 delta put to the 30 delta short reduced the profit by 15%, but cut the worst loss by 31%. Okay, that sounds good. Purchasing the 15 delta put to the 30 delta short put reduced the largest profit by 50% while cutting the worst loss by 55%. So among the above positions, which would you prefer? Mr. Batista, would you rather cut your profit by 50% and your worst loss by 55, or cut your profit by 15 and your worst loss by 31? It's a toss-up. I mean,
it's 6 of one, half dozen of another. I go with the latter. I usually.
Let's go to the next slide. So notice that the average P&L of a narrow spread is very close to zero, suggesting that it may be better to buy a smaller delta wing that take more risk but make significantly more money. So purchasing the 5 delta put to the 30 delta short put to reduce the average P&L by 17% while the worst loss by 31% is probably the best play. Purchasing the 15 delta put to reduce the 30 delta short put to reduce the P&L by 56% while cutting the worst loss by 55%. We put these up against each other so you can see there is no wrong answer. The difference is essentially just like it's a comfort level. And in this case, how do I make the most amount of money and cutting the worst loss by some number? And in this case, the research team is not telling you which actually to do, but just presenting the numbers. And the 5, 10, or 15 delta puts would probably be the best. Just a question of which one.
I get it. I mean, look, you go from 500 in loss. I look at that. Forget about the wins for a second. From 500 loss to 2,500. Well, 2,500 in loss. And we always go somewhere in the middle, which is kind of what they're trying to highlight here. I mean, I think that 15 delta is probably the one to go to.
Yeah, I'm thinking it's 5 or 10, but whatever.
Yeah.
It's a choice. Let's go to the next slide. So there isn't a clear-cut distinction between good or bad. There isn't a good wing or a bad wing to choose, but your choice may be guided by your desired trading outcomes. If you're looking to incorporate wings into your trading strategy, it's worth considering the 5 delta wing as an option. This choice provides a slightly lower profit potential compared to naked strategies while reducing some of your maximum risk.
I think when you're going out to that, I'm sorry to interrupt you. I think when you're going out to that 5 delta, you're really looking at it more as a buying power reduction. Like I'll do it a lot now because it's a buying power reduction. It takes my buying power reduction, cuts it by a tenth. Cuts it by 9/10, which is significant.
You can always adjust your approach on a trade-by-trade basis based on changes to your risk tolerance. Let's go to the last slide. Typically, the decision to purchase wings involves striking a balance between maintaining a short-term portfolio stability and potentially sacrificing long-term profitability. For those who are contemplating reducing their risk exposure, starting with 5 delta wings is a prudent approach, as it offers a moderate yet noticeable reduction in risk relative to reward compared to engaging in naked selling strategies.
So if you were what did it say there? What is it? Where is it? You read it. Never mind. You a contemplating type of person? Do you
It's a big word for you, contemplating.
contemplate? Do you contemplate?
I contemplate a lot of things. Like I contemplate why I'm here and why I'm still tortured.
I'm staring at your sorry ass.
Yeah. Purchasing too large a delta can result into nullifying any profit.